Hi, Marjorie Dybec here with the Dybec team at Douglas Elliman Real Estate. I thought it was time we talked about the new tax plan. So we're getting a lot of questions about the new tax plan, and so it needed to be addressed. So there are three areas that sort of overlap with real estate, and so we're going to talk about those three areas. The first is the primary residence tax exemption. So if you live in your primary residence and have lived there for the past two out of the past 5 years and decide to sell that property and realize a profit on that property, you don't have to pay capital gains for any profit up to $250,000 for an individual or up to $500,000 for a couple. So that remains completely unchanged. Yay. The next is the mortgage interest tax deduction. So if you have up to, currently, if you have up to $1 million worth of mortgages, the interest you pay on those mortgages is a deduction on your federal tax return. In the new plan, you can still deduct the interest you're paying on your mortgages, but only up to a maximum of $750,000 worth of mortgages. So it's a reduction in the total amount of mortgages that you can carry. So it's possible that we may start to see buyers who are purchasing in the 1.1 to 1.6 range try to hold their total mortgage burden down to underneath that $750,000 threshold. In New York City, I think the majority of people who want to do that will have the access to the cash necessary to be able to do it. And those that don't have the access to the cash to be able to do that won't let that little tax hit that they're going to feel affect their buying decision. They'll still go forward with the purchase. It's not going to make them buy a less expensive property if they really want something else. I just don't see it affecting people's buying habits. I don't think that the hit is going to be significant enough to make them not make a buying decision. And then the third area is the state and local tax deduction, which is affectionately referred to as the SALT deduction. And this says that if you pay city and state taxes that are in excess of $10,000, you're only going to be able to deduct $10,000 worth of city and state taxes from your federal tax return. So a lot of us pay more than $10,000 in city and state taxes. And so I do think that most New Yorkers are going to be paying, they're going to have a fairly significant hit on their federal tax return because of this cap that's now being put on our state and local taxes. And so, you're going to have to talk to your own tax advisor as to how much that real dollar amount will be for you. So the question is that going to affect people's buying habits? When in September, when they're looking for a property, are they going to think about, oh, well, I'm going to have to pay a little bit more in my, because my SALT deduction isn't going to exist. And so I'm not going to buy this property that I've just fallen in love with because of that. So, time will tell. But we're hopeful that the gain that most of our clients, both buyers and sellers, are getting from their income side of things from this new tax plan will offset whatever hit they're getting from this new the loss of the SALT deduction. So anyway, that's our take on those three areas. So how do we think it's going to affect property values? Well, that really comes back to, does it change buyers' behaviors? Do buyers buy less expensive properties? Do they buy fewer properties? Do they stop buying altogether? How is it going to actually affect it? And so we've been really talking to clients and trying to figure it out. A lot of our clients are buying, that dream pied-à-terre that they've been, hoping to buy all of their lives and now have the cash to purchase it. Some of them are buying, a larger home because they've had children, and so they're still going to have that need. Many people are buying their first home in New York City. It might be a little studio apartment, or it might be, a 1 or 2 bedroom, and it's their first property, but they need to have housing and they want to own. And so for all of those kinds of buyers, I don't really see this, even if people are paying a little bit more in federal taxes, I don't see it changing their buying behavior. I think they're still going to buy. In 2018, however, we don't really have all the answers. People haven't really started to pay their new tax bills, and so there's a little uncertainty. And like with all markets, uncertainty makes people hesitate a little bit. And we're already seeing in this first quarter, we're seeing a little hesitation in the market. And so this video is our attempt to try to allay some of those concerns, answer your questions, and get rid of some of that hesitation. So anyway, we don't really think it's going to profoundly affect buying habits. But watch interest rates. Those do have a tendency to really significantly affect buying habits. So we're watching those really closely, and I hope you are too. Thanks for listening. Take care. Bye.